The CPA Blueprint, genre, business and economics, target audience, accounting students, CPA candidates, and early to mid-career accountants, structure model, Gemini 3R Pro preview, content model, Gemini 3R Pro preview. Chapter 1, Architecting Your Future, the Value of the CPA Designation. Sections, Section 1.1, Distinguishing the CPA license from other financial credentials, Section 1.2, Analyzing the return on investment, salary trajectory and job security, Section 1.3, Identifying the gold standard reputation in global business, Section 1.4, Visual roadmap, the timeline from student to licensed professional. When you decide to build a skyscraper, you don't start with the curtains or the paint color. You start with the structural engineering. You dig deep, pour a massive concrete foundation, and install reinforced steel beams. Without that infrastructure, the building cannot rise, it cannot withstand the wind, gravity, or time. Your career in accounting is no different. You are the architect, and the Certified Public Accountant, CPA, a license is your reinforced steel. It is the structural integrity that allows you to build higher than you could with a standard degree alone. Many students view the CPA exams as a hurdle or a massive, expensive, time-consuming obstacle standing between them and a paycheck. I want you to reframe that mindset immediately. The CPA is not a barrier, it is a force multiplier. It turns a job into a profession and a paycheck into a career trajectory. In this chapter, we aren't just looking at pass rates or exam sections. We are looking at the why. We are architecting the business case for your future self. 1.1 Distinguishing the CPA license from other financial credentials. The financial world is an alphabet soup of acronyms: CPA, CMA, CFA, CIA, MBA, EA. It is easy to get lost in the letters and assume they are roughly equivalent badges of honor. They are not. The critical distinction lies in the definition. The CPA is a license, not just a certification. It is a statutory privilege granted by a state board of accountancy. This license grants you a specific legal authority, the right to sign audit opinions and represent clients before the IRS, that no other designation carries. While an MBA proves you understand general business strategy and a CFA demonstrates deep investment knowledge, the CPA represents the public trust. It tells the marketplace that you have met rigorous standards of education, examination, and experience, and that you are bound by a strict code of ethics enforced by law. Figure, a Venn diagram comparing CPA, CFA, and MBA. The center intersection is labeled Strategic Financial Leadership. The CPA circle is highlighted in gold with unique attributes listed: statutory authority, audit signing rights, public trust. The background is clean and professional, using a blueprint aesthetic. Let's look at how the CPA compares to its peers in a practical context. Designation primary focus: the X-factor ideal career path. The CPA is the foundation. Many professionals eventually layer an MBA or CMA on top of their CPA, but rarely do you see it work as effectively in reverse. The CPA provides the technical mastery of the language of business that makes the other designations more effective. 1.2 Analyzing the return on investment, salary trajectory and job security. Let's speak the language we all understand: numbers. Preparing for the CPA exam requires a financial investment in review courses and exam fees, usually totaling between $2,000 and $4,000. It also requires an investment of time, typically 300 to 500 hours of study. Is the ROI real? The data suggests the return is astronomical. Industry surveys consistently show that new CPAs earn 10% to 15% more than their non-certified peers right out of the gate. However, the gap widens significantly as you climb the corporate ladder. Non-CPAs often hit a glass ceiling at the manager or senior manager level, while CPAs possess the credentials required for controller and CFO roles. Over the course of a 40-year career, the difference in lifetime earnings between a CPA and a non-CPA is estimated to be over $1 million. That $3,000 investment in study materials yields $1 million return. There are very few assets in the financial world that offer that kind of leverage. Figure, a line graph showing career earnings trajectory. The x-axis represents years of experience, 0 to 40, and the y-axis represents cumulative earnings. Two lines diverge. The CPA line curves upward exponentially, while the non-CPA line grows linearly and flattens out mid-career. Key milestones like manager promotion and CFO role are marked on the CPA line. Beyond the salary, we must discuss security. Accounting is often described as recession-resistant, but the CPA adds a layer of recession-proof armor. In times of economic expansion, companies need CPAs to manage growth, mergers, and acquisitions. In times of economic contraction, companies need CPAs even more to manage cost-cutting, restructuring, and tax efficiency. You are the doctor of the business world. You are needed when the patient is healthy, but you are absolutely vital when the patient is sick. 1.3 Identifying the gold standard reputation in global business. There is an intangible asset you acquire when you pass these exams: instant credibility. Imagine walking into a boardroom with a new client. You are young, perhaps only a few years out of university. If you introduce yourself as an accountant, you are viewed as a processor of data. If you introduce yourself as a CPA, you are viewed as an expert. The dynamic shifts. The client assumes competence before you even speak. This gold standard reputation extends far beyond the walls of an accounting firm. The CPA designation is highly respected in *tech startups. Investors want to know the burn rate is calculated correctly. *nonprofits, donors need assurance that funds are used properly. *law enforcement, the FBI and forensic units actively recruit CPAs to track financial crimes. I often tell my mentees that the CPA is a passport. It allows you to travel between industries. You can start in audit, move to corporate finance in the fashion industry, pivot to a tech startup, and end up in non-profit management. The rigorous nature of the exam is public knowledge. Everyone knows you didn't just pay a fee to get those letters. They know you sacrificed weekends, mastered complex regulations, and demonstrated grit. That reputation for discipline precedes you in every interview you will ever have. 1 point for visual roadmap: the timeline from student to licensed professional. Understanding the value is the why. Now we need to visualize the how. The path to licensure is often referred to as the 3S: education, exam, and experience. Navigating this timeline requires foresight. You cannot wait until you graduate to start planning this architecture. Figure, a horizontal construction timeline infographic titled The CPA Blueprint Roadmap. Stage 1, the foundation, university. Icon of a graduation cap. Text, 120 versus 150 credit hours. Stage 2, the inspection, the exam. Icon of a Scantron shield. Text, pass all 4 sections within 30 months. Stage 3, the build, experience. Icon of a hard hat or handshake. Text, 1 to 2 years supervised work. Stage 4, the occupancy permit, ethics and license. Icon of a stamped seal. Text, ethics exam plus state board application. The visual style is technical, using blueprint blue and white lines. Step 1, education, the 150-hour rule. Most states require 150 semester hours of education to become licensed, although you can often sit for the exams with 120 hours, a standard bachelor's degree. This gap is usually bridged by a master's degree or a double major. Plan your course load early to ensure you hit the specific accounting and business credit requirements for your jurisdiction. Step 2, the exam. This is the beast we will tame in later chapters. It consists of 4 sections: 1. AUD, Auditing and Attestation, 2. Financial Accounting and Reporting, 3. Regulation Tax, 4. Discipline Section, Bar, ISC, or TCP. You must pass all 4 within a rolling window, typically 30 months depending on recent rule changes. Step 3, Experience. You cannot be a CPA just by being book smart. You generally need 1 to 2 years of work experience under the supervision of an active CPA. This ensures you can apply theory to the messy reality of actual business transactions. Step for ethics. The final Polish is the ethics exam, required by most states. It is a take-home test, but do not underestimate it. It reinforces the core promise of the profession, integrity. By visualizing this roadmap now, you can architect your life to accommodate the load. You are building a career that will support you for decades. The effort you put in during this foundational phase will determine the height of the structure you can eventually build. Chapter 2: Laying the Foundation, Academic Prerequisites and Eligibility. Sections: Section 2.1, Navigating the 150-hour rule and credit requirements by jurisdiction. Section 2.2, Strategic course selection to align with exam content areas. Section 2.3, Bridging the gap between university theory and exam reality. Section 2.4, Creating a personalized eligibility checklist and application timeline. In Chapter 1, we discuss the structural steel of your career. You know that why. You understand that the CPA designation is the difference between having a job and building a legacy. Now, we have to deal with the zoning laws and permits. Before you can pour the foundation of your exam preparation, you must navigate the bureaucratic landscape of eligibility. This is often the most confusing part of the journey. It is where enthusiasm frequently meets the friction of administration. Many candidates assume they are eligible simply because they have an accounting degree. This assumption is dangerous. The gap between graduating and qualifying to sit for the exam can be a chasm filled with specific credit requirements, jurisdiction nuances, and timing missteps. We are going to audit your academic history. We are going to treat your transcript like a balance sheet, ensuring every asset is accounted for and every liability is addressed before you spend a single dollar on review materials. Section 2.1, Navigating the 150-hour rule and credit requirements. The 150-hour rule is the standard across almost all U.S. jurisdictions for licensure. However, there is a critical distinction that trips up countless candidates: the difference between eligibility to sit and eligibility for licensure. Think of this like a driver's license. In some states, you can get a learner's permit, sit for the exam, before you are fully qualified to drive alone, get the license. In others, you need the full education package before you even touch the steering wheel. Most bachelor's degrees provide 120 credit hours. That leaves a 30-hour gap. How you fill that gap matters immensely. It isn't just about quantity. Strict distribution requirements usually mandate specific hours in upper-level accounting and business courses. Figure: extra detailed AI-ready prompt for AI-generated diagram showing a state jurisdiction map style visualization. The map of the USA should be color-coded into 3 distinct categories: sit at 120, a license at 150, sit at 150, a license at 150, and provisional status states. Include a sidebar legend explaining the colors. The style should be clean, vector-based, utilizing a blueprint blue and white color scheme to match the book's theme. The jurisdiction jungle. Your first task is to visit the National Association of State Boards of Accountancy, NASBA, website or your specific state board of accountancy. Do not rely on what your friend from a different university told you. Some states, like California or Virginia, have incredibly specific requirements regarding ethics credits or business communication. If your transcript shows business ethics but the board requires accounting ethics, you could be rejected. If you are an international candidate, this scrutiny is doubled. You will likely need a credential evaluation service to translate your academic achievements into U.S. credit hour equivalents. The provisional status opportunity. If you are currently a student, look for provisional status. This allows you to sit for the exam during your final semester before your degree is conferred. This is a strategic goldmine. It allows you to take a difficult section, like financial accounting and reporting, far, while your academic knowledge is still fresh. However, provisional status comes with a ticking clock. Once you pass, you generally have a tight window, often 60 to 120 days, to submit your final official transcript. Missing this deadline can void your score. Section 2.2, Strategic Course Selection to align with exam content. If you still have credits to earn to reach the 150-hour threshold, do not waste them on easier fillers. You are paying for these credits, make them pay you back in exam points. The CPA evolution model has changed the landscape. You now have 3 course sections, FAR, AUD, Reg, and 1 discipline section, BAR, ISC, or TCP. Your remaining college courses should act as your first round of exam prep. If you plan to take the Tax Compliance and Planning, TCP, discipline, taking an advanced corporate tax or partnership tax elective in college is non-negotiable. Figure, extra detailed AI-ready prompt for AI-generated diagram showing a course-to-exam mapping strategy. On the left, a list of university course titles, e.g., Intermediate Accounting 2, Auditing Theory, Data Analytics, Federal Taxation. On the right, the CPA exam sections, FAR, AUD, Reg, disciplines. Connecting lines flow from courses to specific exam buckets. The style should look like a wiring diagram or a subway map, emphasizing connectivity and strategic planning. Filling the gap with data and tech. The modern CPA exam is heavy on data analytics and technology. If you have free electives, avoid History of Jazz unless you need a mental break and opt for Accounting Information Systems or the Data Analytics for Business. The Information Systems and Controls (ISC) discipline heavily tests IT governance and data security. A single robust college course in this area can reduce your future study time by 20 to 30 hours. The audit blind spot. Most undergraduate programs require only one auditing course. However, the AUD section of the exam is deceptively difficult because it requires judgment, not just memorization. If your university offers an advanced auditing or forensic accounting course, take it. These classes often dive into the internal control frameworks, COSO, that constitute a massive portion of the AUD exam. Section 2.3, Bridging the Gap Between University Theory and Exam Reality. There is a distinct shock that happens when a 4.0 GPA student opens a CPA review test bank and scores a 55%. University accounting teaches you the theory of how things should work in a perfect world. Professors give partial credit for showing your work. They want you to understand the why. The CPA exam does not care about your why. It cares about the what, and it is graded on a binary scale. You are either right or you are wrong. There is no partial credit for a simulation where you got the journal entry right but the date wrong. The exception mindset. In college, you learn the general rule. On the CPA exam, you are tested on the exception to the rule and the exception to the exception. For example, in school, you learn that revenue is recognized when earned. On the exam, you need to know exactly how revenue is recognized in a construction contract when the project is 40% complete and a loss is projected for the total job. You must shift your mindset from learning for knowledge to learning for application. You are no longer a student, you are a candidate demonstrating competence to protect the public interest. Figure, extra detailed AI-ready prompt for AI-generated diagram showing a mindset shift comparison. A split-screen illustration. On the left, labeled University, an illustration of a professor writing on a chalkboard with theory and the partial credit floating in the air. On the right, labeled CPA Exam, a computer screen showing a countdown timer, a complex multiple-choice question, and a pass-fail stamp. The visual style should be high contrast, perhaps using warmer colors for university and cooler, sharper colors for the exam side. The endurance factor. University exams usually last 60 to 90 minutes. The CPA exam is 4 hours long per section. It is a mental marathon. The gap here is physical and mental stamina. Your academic career has likely not trained you to maintain peak cognitive focus for 4 hours straight. We will address building this stamina in later chapters, but you must acknowledge now that knowing the material is only half the battle. Section 2.4, Creating a Personalized Eligibility Checklist and Application Timeline. We are going to build your personalized eligibility roadmap. Missing a step here doesn't just mean a delay, it often means lost application fees. The bureaucracy moves slowly. State boards and NASBA are not known for their speed. You must manage this process proactively, or you will find yourself ready to test but unable to schedule. Step 1. The Transcript Audit. Pull your unofficial transcripts from every college you have attended. Yes, even the community college where you took one math class in the summer. Create a spreadsheet. List every accounting and business course. Sum the credits. Compare this total against the specific requirements of your chosen jurisdiction. If you are at 147 hours, you need a plan for those last 3 credits immediately. Step 2. The Application and NTS. You will apply to your state board, or through NASBA CPA Central, depending on the state, for an authorization to test, ATT. Once approved, you pay fees to receive your notice to schedule, NTS. Warning, the NTS has an expiration date, usually 6 months. Do not apply for all 4 sections at once unless you plan to take all 4 in 6 months. If your NTS expires, you forfeit the fees. A smart strategy is to apply for 2 sections at a time. This keeps the pressure on but mitigates the financial risk. Step 3. The Timeline Visualization. Project management is now a part of your daily life. Work backward from your target test date. T-8 weeks, submit application and transcripts. Wait times vary wildly by season. T-4 weeks, receive NTS. Schedule exam date at Prometric immediately. T-0 weeks, exam day. If you require testing accommodations for a disability, add at least 4 to 6 weeks to this timeline. The approval process for accommodations is rigorous and slow. By treating your eligibility as a professional project rather than a student registration task, you take control of the process. You are the architect. You don't let the permit office dictate your building schedule, you plan for it. With your eligibility confirmed and your foundation laid, you are ready to look at the blueprints. In the next chapter, we will decode the exam structure itself.
Chapter 3. Decoding the Beast, Understanding the Uniform CPA Examination. Sections, Section 3.1, The Core Plus Discipline Model, Breaking Down the Current Exam Structure, Section 3.2, Deep Dive into the Core, FAR, AUD, and Reg Essentials, Section 3.3, Choosing Your Discipline, BAR, ISC, or TCP based on career goals, Section 3.4, Analyzing pass rates and scoring weights to assess difficulty. In Chapter 2, we cleared the administrative hurdles. You have your transcripts sorted, your eligibility confirmed, and your application pending. Now, we turn our attention to the obstacle itself. For decades, the CPA exam was a monolith, 4 sections that were identical for everyone, regardless of whether you planned to audit hedge funds in Manhattan or handle tax returns for small businesses in Topeka. It was a one-size-fits-all gauntlet. But the profession has changed. Technology, data analytics, and specialized tax laws have expanded the body of knowledge beyond what one human can reasonably memorize. In response, the AICPA launched the CPA Evolution Initiative. You are no longer just taking a test, you are navigating a modular system designed to match the complexity of modern business. To defeat this beast, you must first understand its anatomy. 3.1 The Core Plus Discipline Model. The current exam structure is built on a Core Plus Discipline model. Think of this like a university degree. Everyone takes the general education requirements, the core, but you get to declare a major, the discipline. Regardless of which path you choose, the destination is identical. There is no tax CPA license or audit CPA license. There is only the CPA license. Your choice of discipline does not restrict your future practice rights, it merely dictates which exam section you sit for to earn the credential. This model consists of 3 mandatory core sections and 1 discipline section of your choosing. Figure, a detailed, clean infographic illustrating the Core Plus Discipline model. The visual should feature a central solid foundation labeled the core containing 3 interlocking pillars, FAR, AUD, and REG. Rising from this foundation are 3 divergent paths or branches labeled the disciplines, BAR, ISC, and TCP. The design should be modern, using a blueprint aesthetic with navy blue and architectural white lines. You must pass all 3 core sections. 1. Financial accounting and reporting, FAR. 2. Auditing and attestation, AUD. 3. Regulation, REG. Then, you must pass one of the following disciplines. 1. Business analysis and reporting, BAR. 2. Information systems and controls, ISC. 3. Tax compliance and planning, TCP. This shift is beneficial for you. It allows you to lean into your strengths or career interests rather than forcing you to master advanced concepts in areas you never plan to touch. However, it adds a layer of strategy to your exam planning that previous generations of CPAs didn't have to consider. 3.2 Deep dive into the core, FAR, AUD, and Reg Essentials. The core represents the non-negotiable skills every CPA must possess. These exams test your fundamental knowledge. They are broad, covering a vast amount of territory, but they generally stay within the realm of essential competencies. Let's look at the personality of each section. Financial accounting and reporting, FAR. FAR is widely considered the gatekeeper. It covers the financial frameworks used by business entities, not-for-profits, and state and local governments. If you are working in public accounting or corporate finance, this is your bread and butter. The challenge, volume. The sheer amount of material in FAR is overwhelming. You are expected to know US GAAP inside and out, from revenue recognition to lease accounting, plus the intricacies of governmental fund accounting. The strategy, FAR is a marathon, not a sprint. You cannot cram for this. It requires consistent practice with journal entries and calculations. If you can master FAR, you prove you have the discipline to finish the rest of the exams. Auditing and attestation, AUD. If FAR is about math and rules, AUD is about logic and language. This section covers ethics, professional responsibilities, and the entire audit process from planning to reporting. The challenge, ambiguity. In FAR, the answer is usually a calculated number. In AUD, you will often face questions where 2 answers seem correct, but one is more correct based on auditing standards. It tests your judgment. The strategy, memorization isn't enough here. You need to understand the why behind an audit procedure. Focus heavily on internal controls and the different types of audit opinions. Regulation, REG. REG is the intersection of federal taxation and business law. It covers ethics for tax practitioners, federal tax procedures, and business law concepts like contracts, agency, and debtor-creditor relationships. The challenge, the rules are rigid, and there are thousands of them. You need to know individual tax, entity tax, C-Corp, S-Corp, partnerships, and the nuances of property transactions. The strategy, focus on the flow of numbers through a tax return. Understanding basis, the tax value of an asset or investment, is the golden key to passing REG. If you master basis, you master the exam. Core section focus area key characteristic duration. 3.3 Choosing your discipline, BAR, ISC, or TCP. Here is where you get to be the architect of your own testing experience. Choosing a discipline causes anxiety for many candidates, but remember, this decision does not define your career. It only defines your next few months of studying. You should choose your discipline based on 2 factors, your career goals and your academic strengths. Business analysis and reporting, BAR. BAR is essentially FAR 2.0 mixed with the old business environment and concepts, BEC, section. It covers advanced accounting, technical reporting, and data analytics. Who is this for? If you loved your intermediate and advanced accounting classes, or if you plan to work in technical accounting, financial reporting, or assurance services for public companies, BAR is the natural choice. The vibe, heavy on calculations, revenue analysis, and complex accounting issues like derivatives and hedge accounting. Information systems and controls, ISC. ISC focuses on IT governance, data security, and SOC, system and organization controls, engagements. It is the most modern of the exams, reflecting the profession's shift toward technology. Who is this for? If you are interested in IT audit, data integrity, or if you simply hate tax and complex financial reporting, ISC is your haven. It pairs exceptionally well with the AUD core section. The vibe, conceptual, terminology-heavy, and focused on controls and security frameworks. Tax compliance and planning, TCP. TCP takes the concepts from Reg and goes deeper. It focuses on advanced individual and entity tax compliance, as well as personal financial planning. Who is this for? If you are entering a tax practice, this is a no-brainer. It reinforces what you do daily. If you struggled with Reg, avoid this. If you excelled at Reg, this is your path of least resistance. The vibe, rules-based, calculation-heavy, and deeply entrenched in the Internal Revenue Code. Figure, a decision tree flowchart titled Choosing Your Discipline. The starting node asks, which core section did you prefer? Branch 1. I liked FAR leads to do you enjoy advanced technical accounting? Yes select bar. Branch 2. I liked AUD leads to are you interested in technology and controls? Yes select ISC. Branch 3. I liked Reg leads to do you plan to work in tax? Yes select TCP. The visual should be clean, using simple iconography for each path, calculator for bar, shield lock for ISC, tax form for TCP. 3.4 Analyzing pass rates and scoring weights. Understanding how the exam is scored is just as important as knowing the material. The AICPA does not grade on a simple percentage. You don't need to get 75% of the questions right, you need a score of 75. This score is a scaled score derived from item response theory, IRT. In simple terms, each question has a difficulty weight. Answering a difficult question correctly is worth more than answering an easy question correctly. The exam is composed of 1. Multiple choice questions, MCQs. These test your breadth of knowledge. 2. Task-based simulations, TBSs. These test your depth of knowledge. These are case studies where you must apply concepts to real-world documents, fill out forms, or perform research. The weighting breakdown. For the core sections and disciplines, the scoring weight is generally split 50/50 between MCQs and simulations. This is a critical insight. You cannot pass the CPA exam by being a good guesser on multiple choice questions. You must be able to apply the knowledge in the simulations. A note on pass rates. Historically, CPA exam pass rates hover around 45% to 55%. Do not let this statistic terrify you. It is a filter. That number includes people who didn't study, people who studied the wrong way, and people who underestimated the exam. If you treat this process with respect, if you build the structure we discussed in Chapter 1 and navigate the eligibility we covered in Chapter 2, you are not competing against that 50% pass rate. You are competing only against the standard of competence. The exam is difficult, but it is fair. It rewards preparation, not just intelligence. Now that we have decoded the structure of the exam, we need to talk about the fuel that powers your preparation. In the next chapter, we will discuss the financial investment, selecting a review course, and budgeting for this journey. Chapter 4, The Study Ecosystem, Building a Routine that Survives the Grind. Sections, Section 4.1, Evaluating Commercial Review Courses and Selecting the Right Fit, Section 4.2, Constructing a Realistic Study Schedule, Blocking Time for Working, Professional. Section 4.3, Active Learning Techniques, Moving Beyond Passive Video Watching, Section 4.4, Utilizing Visual Aids and Mnemonics to Retain High-Volume Information. In Chapter 3, we decoded the beast. You now understand the structure of the core and discipline sections. You know the enemy. But knowing the enemy is not the same as defeating it. To win, you need weapons, and more importantly, you need the discipline to sharpen them every single day. You cannot pass the CPA exam on willpower alone. Willpower is a finite resource, It evaporates after a long day of ticking and tying spreadsheets or arguing with clients. When willpower fails, your system must take over. We are going to build your study ecosystem. This isn't just about picking a book, it is about engineering an environment where studying becomes the default setting, not a daily negotiation with yourself. 4.1 Evaluating commercial review courses and selecting the right fit. The first component of your ecosystem is your source material. Let's be clear, you cannot study for this exam using only textbooks and FASB pronouncements. You need a commercial review course. These providers distill thousands of pages of authoritative literature into digestible bites. However, choosing a provider is often done poorly. Many candidates simply default to whatever their firm pays for, or they buy the most expensive option assuming cost equals quality. This is a mistake. You are not buying a textbook, you are hiring a digital coach. You need to assess your learning style honestly. Do you need a cheerleader, a drill sergeant, or a data-driven algorithm? The big box versus the adaptive approach. The market is generally split into two camps. First, you have the traditional giants. These courses feature high-production video lectures, massive textbooks, and famous instructors. They mimic a university classroom. If you are an auditory learner who needs the concept explained on a whiteboard before you try a problem, this is your lane. The second camp focuses on adaptive learning and technology. These platforms care less about 40-minute lectures and more about microlessons and algorithm-based multiple-choice questions, MCQs. They serve you questions you are bad at until you stop getting them wrong. Figure, a comparative decision matrix graphic titled Review Course Selection Matrix. The x-axis ranges from visual lecture dependent to active problem-solving dependent. The y-axis ranges from structured linear path to adaptive algorithm-driven. The graphic uses clean blueprint-style lines to show where different learning styles fall within the quadrants, with icons representing video players, books, and data nodes. The free trial stress test. Never commit $2,000 plus without a test drive. Sign up for free trials of at least 3 major providers. Do not just watch the intro video. Go to a difficult topic like deferred taxes or bonds and see how they explain it. Does the instructor annoy you? Is the interface clunky? Does the mobile app crash? You will be spending 400 hours with this software. If the instructor's voice grates on your nerves in the trial, it will be unbearable by R300. 4.2 Constructing a realistic study schedule, blocking time for working professionals. Now that you have the tools, we need to find the time. This is where the dream dies for most candidates. Everyone plans to study in the evenings. But the evening is a vague, defenseless concept that easily falls victim to overtime, fatigue, and Netflix. You need to treat studying like a client meeting. It requires a hard start time and a hard stop time. We are going to use a technique called zero-based time blocking. The early morning advantage. I am going to give you advice you might hate: study in the morning. If you are working full-time, your brain is freshest at 6 a.m. By 6 p.m., your cognitive load is maxed out. You have made hundreds of decisions, answered 50 emails, and stared at a screen for 8 hours. Studying effectively in that state is nearly impossible. Shift your day. Wake up 2 hours earlier. Give the CPA exam your best hours, and give your employer the rest. The 20-hour rule. A realistic schedule for a working professional is 15 to 20 hours a week. Anything more leads to burnout, anything less leads to memory decay. You forget Chapter 1 by the time you reach Chapter 5. Here is a blueprint for a standard week. Day session type, duration, activity. Notice that Friday night is off. Sunday afternoon is off. You need recovery time to let the synaptic connections solidify. Figure, a visual calendar layout styled like a construction Gantt chart. It shows critical path items in red, morning study blocks, and buffer zones in green, rest gym. The visual emphasizes the rigid blocks of time in the early morning compared to the fluid danger zone of the evenings. 4.3 Active learning techniques, moving beyond passive video watching. Watching a lecture is not studying. It is entertainment. Many students fall into the passive trap. They watch the video, highlight the book until the whole page is yellow, and nod their heads. They feel productive. But when they hit the MCQs, they fail. Why? Because they recognized the information, but they did not retain it. You must shift to active learning. This means engaging with the material, not just consuming it. The MCQ first approach. Try this radical approach. Attempt the multiple choice questions before you watch the lecture or read the chapter. You will get them wrong. That is the point. By failing the question first, you prime your brain to look for the answer. You create a knowledge gap. When you finally read the text, your brain isn't just skimming, it is hunting for the solution to the problem you just missed. The Feynman technique. If you think you understand a concept, like leases or derivatives, stop and try to explain it to an imaginary 10-year-old, or your cat, or a rubber duck on your desk. If you find yourself using jargon or stumbling over the why, you don't know it yet. You have memorized a definition, but you haven't mastered the concept. Simplification requires deep understanding. 4.4 Utilizing visual aids and mnemonics to retain high-volume information. The CPA exam is a mile wide and an inch deep. The sheer volume of data is the challenge. Your brain is not a hard drive, it is an associative network. It remembers images and stories better than lists of rules. We are going to use visual aids and mnemonics to hack your retention. Mnemonics, the wackier, the better. You will encounter classic mnemonics like CRIME 4 internal controls, control environment, risk assessment, information communication, monitoring, existing control activities. These are helpful, but the ones you create yourself are often stickier. Make them absurd. If you are trying to remember the elements of a contract, visualize a clown signing a document with a giant crayon. The brain latches onto novelty and absurdity. Mind mapping the blueprint. Linear notes, bullet points down a page, are often inefficient for complex accounting cycles. Instead, use mind maps. Place the central concept in the middle of a blank page, e.g., deferred taxes. Draw branches out for asset, liability, permanent differences, and temporary differences. Connect them with lines that explain the relationship. This replicates how the brain actually stores data in clusters of related concepts. Figure, a detailed illustration of a hand-drawn mind map specifically for the concept of revenue recognition, ASC 606. The central node says 5 steps of RevRec. Branches extend to identify contract, identify performance obligations, etc. Each branch has small doodles, e.g., a handshake for contract, a price tag for transaction price. The style should look like a neat architect's sketch on graph paper. Flashcards are for retention, not learning. Do not put complex concepts on flashcards. Flashcards are for binary facts, tax rates, filing deadlines, thresholds, and formulas. Use spaced repetition software, like Anki or the features built into your review course. These tools show you the cards you struggle with more frequently and the ones you know less often. This maximizes the efficiency of your review time, ensuring you aren't wasting mental energy on facts you have already mastered. The ecosystem in action. Building this ecosystem takes effort. It takes a week or two to adjust to the early mornings. It feels uncomfortable to do MCQs before reading the book. It feels silly to draw cartoons of tax laws. But remember Chapter 1. We are building a skyscraper. This ecosystem is your scaffolding. It holds you up when the wind blows and the work gets hard. Once you have your course, your schedule, and your active learning techniques locked in, the emotion comes out of the process. You don't have to decide to study today. You just step into the ecosystem and do the work. Chapter 5, Tactical Execution, Mastering Multiple Choice and Simulations. Sections, Section 5.1, The Art of the MCQ, Process of Elimination and Identifying Distractors, Section 5.2, Conquering Task-Based Simulations, TBS, with the Research Database, Section 5.3, Managing the Clock, Time Allocation Strategies for each testlet, Section 5.4, Simulated Exams versus Practice Drills, knowing when to test your endurance. In Chapter 4, we built your ecosystem. You established the discipline, the environment, and the routine necessary to absorb massive amounts of information. But absorbing information and passing the exam are two different skills. You can be a brilliant accountant and still fail this test if you do not understand the mechanics of the game. The CPA exam is not just an assessment of your accounting knowledge, it is an assessment of your ability to make decisions under pressure. It tests your judgment, your attention to detail, and your endurance. You need to transition from a student mindset where you try to learn everything to a tactical mindset where your only goal is to secure points. We are going to dismantle the two distinct battlegrounds you will face, the multiple choice questions, MCQs, and the task-based simulations, TBS. We will also discuss the most critical resource you possess, which isn't your knowledge of tax law or auditing standards. It is time. 5.1 The Art of the MCQ, Process of Elimination and Identifying Distractors. Multiple choice questions make up 50% of your score on most sections. Many candidates rush through these, treating them as simple trivia. This is a mistake. The AICPA designs these questions to test the depth of your understanding, often by offering answers that look right at a glance but are technically incorrect. To master the MCQ, you must stop looking for the right answer immediately. Instead, you must become an expert at identifying and eliminating the wrong ones. This is a game of probability. If you can eliminate two obviously incorrect answers, you have increased your odds of success from 25% to 50% before you even do the math. Anatomy of a trap. Every question has three parts: the stem, the story data, the call of the question, what they want, and the options, one key, three distractors. The distractors are not random. They are calculated based on common mistakes. For example, if a question asks for the net book value of an asset in year 2, one distractor will be the value in year 1. Another will be the value if you forgot to subtract salvage value. Another will be the accumulated depreciation itself. If you calculate quickly and mess up a step, your wrong answer is staring right at you, begging you to click it. Figure, AI-ready prompt for diagram showing the anatomy of an MCQ trap. The image should feature a central text block labeled the stem with lines connecting to 4 answer boxes. One answer box is glowing green labeled the key. The other 3 are labeled Distractor 1, Common Calculation Error, Distractor 2, Misreading the Year, and Distractor 3, Plausible but Irrelevant Fact. The visual style should be clean, blueprint schematic style with white lines on a dark blue background. The cover and red technique. I recommend a specific tactical approach for every MCQ. Before looking at the options, read the call of the question, the very last sentence. Determine exactly what is being asked. Are they asking for an increase or a decrease? Are they asking for the expense or the cash outflow? Once you know the goal, read the stem. Anticipate the answer before you look at the choices. If you look at the choices first, you allow the examiners to bias your thinking. Do the work in your head or on your scratchpad, then find the option that matches your derived answer. The absolutes and the outliers. In theoretical questions, audit especially, be wary of absolute language. In the world of accounting, very few things happen always or never. Words like must, only, and always are red flags. Professional judgment usually allows for exceptions. Conversely, look for qualifiers like generally, typically, or material. These words often signal a more nuanced, correct answer. If you are forced to guess, bet against the absolutes. 5.2 Conquering Task-Based Simulations, TBS, with the research database. If MCQs are a sniper contest, task-based simulations, TBS, are hand-to-hand combat. This is where most candidates panic. You are presented with multiple exhibits, emails, invoices, memos, spreadsheets, and asked to fill out a tax return or audit work paper. The sheer volume of information is designed to overwhelm you. The key to conquering the TBS is not to read everything at once. You must compartmentalize the data. The data mining approach. Do not start by reading every single exhibit. That burns valuable time and fills your working memory with noise. Start by reading the instruction box and the actual input fields. Understanding the required output tells you what data to hunt for. If the simulation asks for inventory adjustments, you can likely ignore the email exhibit discussing payroll issues. Treat the simulation as a scavenger hunt. Open one exhibit, extract the relevant data, apply it to the row in question, and close the exhibit. Keep your workspace clean. Figure, AI-ready prompt for a flowchart visualization titled TBS Attack Strategy. Step 1. Analyze requirements, icon of an eye looking at a form. Step 2. Scan exhibits, icon of folders labeled email, invoice, memo. Step 3. Filter noise, icon of a funnel separating relevant data from irrelevant text. Step 4. Execute calculation, icon of a calculator. Step 5. Verify and close, icon of a checkmark. The flow should be linear and structured like a logical process diagram. Weaponizing the authoritative literature. Included in the exam software is access to the authoritative literature, FASB codification, AI CPA professional standards, or the Internal Revenue Code. Most candidates only use this for the specific research simulation where you are asked to find a citation. This is a wasted opportunity. You can use the research tool for any simulation in that testlet. If you are stuck on a simulation regarding the treatment of a specific lease, open the Research tab. Search for the accounting standard. The answer is literally in the book that is open in front of you. It takes time to find it, so you cannot do this for every question, but when you are blanking on a specific rule or threshold, the research database is your lifeline. Learn to use the advanced search functions during your practice sessions so you can navigate it quickly on game day. 5.3 Managing the clock, time allocation strategies. The clock is a merciless judge. I have seen brilliant candidates fail because they spent 15 minutes wrestling with one difficult MCQ in the first testlet, leaving them only 10 minutes to complete a massive simulation at the end. You have 4 hours. You must budget this currency with the discipline of a CFO. You cannot save time in one testlet to use in a previous one. Once you submit a testlet, it is gone forever. However, banking time early for the complex simulations in testlets 3, 4, and 5 is critical. The 45-minute benchmark. For most sections, a solid rule of thumb is to allocate no more than 45 to 50 minutes for each of the 2 MCQ testlets. This leaves you approximately 2 hours and 20 minutes for the 3 TBS testlets. If you hit the 45-minute mark on testlet 1 and you still have 3 questions left, you must make a strategic decision. You have to guess and move on. The points you lose on those 3 guesses are less valuable than the points you will lose by leaving a whole simulation blank later. The TBS time allocation. The simulations vary in difficulty. Some are short. Some are document review simulations that require extensive reading. You should budget roughly 15 to 20 minutes per simulation. When you open a TBS testlet, scan all the simulations in that specific testlet immediately. Identify which one looks the easiest and which looks the hardest. Do the easiest one first. This builds momentum and ensures you bank those points. Save the beast for last, so you know exactly how much time you have left to wrestle with it. Testlet content target time allocation. 5.4 Simulated exams versus practice drills, knowing when to test endurance. There is a difference between practicing your jump shot and playing a full basketball game. In your study software, you will have practice drills, sets of 10 to 20 questions, and simulated exams, full 4-hour mock tests. Mixing these up is dangerous. Practice drills, the learning lab. Use practice drills to learn. Set them to study mode where you get immediate feedback after every question. If you get it wrong, stop. Read the explanation. Understand why the distractor trapped you. This is where the actual learning happens. Do these drills daily. They keep the material fresh and highlight your weak areas. But remember, getting 100% on a 10-question drill does not mean you are ready. It just means you know those 10 concepts. Simulated exams, the endurance test. Simulated exams are not for learning content, they are for testing your mental stamina and your time management strategy. Taking a 4-hour exam is exhausting. Your brain will fog up around hour 3. Your reading comprehension will drop. Do not take a simulated exam every day, or even every other day. You will burn out before you ever reach the Prometric Center. I recommend taking a full simulated exam only on the weekends, perhaps 2 or 3 times total before your actual test date. Treat these mock exams like the real thing. Turn off your phone. Put your snacks in the hallway. Do not pause the timer. You need to know what it feels like to panic, to be tired, and to push through. When you review the results, don't just look at the score. Look at your timestamps. Did you spend 4 minutes on a single MCQ? That is the leak you need to plug. Figure, AI-ready prompt for a comparative visual titled Training Modes. Left side, the drill showing a runner sprinting short distances, labeled high intensity, immediate feedback, skill acquisition. Right side, the simulation showing a marathon runner checking a watch, labeled endurance, time management, mental stamina. The background should be a split composition, laboratory setting versus racetrack. Mastering the tactical execution of the exam is about control. You control the clock does not control you. You dismantle the questions, you do not let them intimidate you. When you combine this tactical approach with the study ecosystem we built in Chapter 4, you become a formidable candidate. Now that we have covered how to take the test, we need to discuss the specific content strategies for the core sections. The accounting language is vast, but it has a structure. In the next chapter, we will break down financial accounting and reporting, FAR, the section that historically breaks the most hearts, and I will show you how to tame it.
Chapter 6, Mental Endurance, Managing Burnout and Maintaining Momentum. Section 6.1, Identifying Early Signs of Study Fatigue and Cognitive Overload. Section 6.2, Calibration Techniques, Balancing Work, Life, and the Exam. Section 6.3, Recovering from Failure, Analyzing Score Reports to Pivot Strategy. Section 6.4, Exam Day Psychology, Reducing Anxiety and Maximizing Focus. In Chapter 5, we dissected the tactical mechanics of the exam. You now know how to strip down a complex simulation and isolate the correct answer in a multiple-choice question. You possess the weapons required to win the battle. However, having a sharp sword is useless if the soldier is too exhausted to lift it. The CPA exam is not a sprint, it is not even a standard marathon. It is an ultramarathon run through mud, often while working a full-time job during busy season. The primary reason capable accountants fail is not a lack of intelligence. It is a lack of endurance. They burn out, they lose momentum, and they allow the psychological weight of the process to crush their study habits. In this chapter, we shift focus from the technical to the psychological. We are going to protect your most valuable asset, your mind. We will build protocols to manage fatigue, calibrate your life around the exam, and handle the inevitable emotional volatility of this journey. 6.1 Identifying Early Signs of Study Fatigue and Cognitive Overload. The human brain is a biological machine, not a hard drive. It has a limit to how much new information it can encode in a single session before the rate of retention drops to near zero. We call this cognitive overload. Many candidates push past this point out of guilt. They sit in the library for 6 hours, but the last 3 hours are effectively wasted because their brain has stopped writing data to memory. You must learn to recognize when you have moved from studying to staring. If you find yourself reading the same paragraph 3 times without absorbing its meaning, you have hit a wall. If you are making simple calculation errors on topics you mastered 2 weeks ago, your processing power is depleted. Figure, a detailed line graph titled The Law of Diminishing Study Returns. The x-axis represents continuous study hours, 0 to 8, and the y-axis represents retention efficiency, 0% to 100%. The curve remains high for the first 2 hours, begins to dip at hour 3, and plummets sharply after hour 4. A shaded area labeled the danger zone highlights hours 5 to 8. The style should be clean, minimalist, corporate blue and gray, suitable for a business textbook. The symptoms of burnout versus tiredness. There is a distinct difference between being tired and being burned out. Tiredness is cured by sleep, burnout is a systemic rejection of the routine. If a good night's sleep doesn't reset your motivation, you are entering burnout territory. Watch for emotional volatility unrelated to the material. If getting a single multiple-choice question wrong makes you want to throw your laptop, your cortisol levels are too high. This is your brain's check engine light flashing. Another subtle sign is avoidance behavior. This manifests when you spend 30 minutes organizing your desk or color-coding your notes instead of actually doing practice problems. You are subconsciously avoiding the pain of cognitive effort. The protocol for resetting. When these lights flash, you cannot power through. You must initiate a hard reset. This does not mean quitting, it means strategically stepping away to preserve the asset. Take one full day off, no flashcards, no audio notes, no guilt. Engage in high-friction physical activity, like heavy lifting or a long run, to force your body to metabolize the stress hormones. Return to the material only when you can look at a simulation without a sense of dread. Quality inputs equal quality outputs. Studying while resentful only encodes frustration, not accounting standards. 6.2 Calibration techniques, balancing work, life, and the exam. The concept of work-life balance during the CPA exam is a myth. You cannot balance a 50-hour work week, 20 hours of studying, and a vibrant social life. Attempting to do so ensures you will fail at all three. Instead of balance, we strive for calibration. Calibration admits that the scales will be uneven, but it allows you to adjust the tilt intentionally based on your current phase. You have three main buckets: career, exam, and life. At any given moment, you can only fill two of them to capacity. The third must go into maintenance mode. Phase primary focus, secondary focus, maintenance mode. Managing the no. To pass, you must become comfortable with disappointing people temporarily. You have to say no to happy hours, family barbecues, and overtime projects that aren't critical. This requires communication. Tell your friends and family, I am not ignoring you, I am in a submarine until date. I will resurface then. Most people respect boundaries when they are clearly defined and have an expiration date. Your employer is a different stakeholder. Have a frank conversation with your manager. Explain that passing the CPA benefits the firm. Negotiate a study equity arrangement where you trade late nights now for study leave later. The study equity bank. Think of your energy like a bank account. Every decision you make withdraws from this account. Scrolling social media withdraws focus. Arguing with a partner withdraws emotional stability. You must become miserly with your energy. Automate your life where possible. Meal prep on Sundays to avoid decision fatigue on Tuesdays. Wear the same rotation of clothes. Preserve your highest cognitive energy for the most difficult topics. If you are a morning person, do your heavy lifting simulations at 6 a.m. Leave the administrative emails and mindless tasks for when your brain is foggy in the afternoon. 6.3 Recovering from failure, analyzing score reports to pivot strategy. I need to be direct with you, you might fail a section. The national pass rates hover around 50%. Statistically, failure is a very real part of this process. When you see a failing score, allow yourself 24 hours to grieve. Be angry, cry, vent. But after 24 hours, the emotion must be replaced by analysis. A failing score is not a judgment of your worth, it is simply expensive data. You must analyze your score report to understand why you failed. The strategy for recovering from a 74 is radically different from the strategy for a 55. Figure, a flowchart decision tree diagram titled Post-Exam Pivot Strategy. Top box, score received. Branch A, score less than 60. Action, foundational collapse. Reset strategy. Rewatch lectures. Do not reschedule immediately. Branch B, score 60 to 70. Action, concept gaps. Analyze weak areas. Hammer MCQs in weak domains. Reschedule in 4 weeks. Branch C, score 71 to 74. Action, execution error. Content is known. Focus on speed, SIMS, and anxiety management. Reschedule ASAP, 2 weeks. The visual should be high contrast with clear arrows and distinct color coding for the actions. The close call, 70 to 74. Scoring a 74 is painful, but it is also promising. It means you know the material. You likely failed due to exam stamina, time management, or simply getting a bad draw of simulations. Do not restart your course from Chapter 1. You will burn out reviewing things you already know. Instead, focus on pounding the pavement with MCQs. Do sets of 30 randomized questions to keep your brain agile. Review your timing. Did you rush the last testlet? If so, your problem isn't accounting, it's pacing. Reschedule the exam as soon as the window permits. Momentum is your friend here. The gap, 60 to 69, and the cliff, less than 60. If you scored in the 60s, you have specific weak spots. Your score report will indicate whether you were weaker or comparable in specific content areas. Target those areas relentlessly. You don't need a full rebuild, but you need significant renovations. If you scored below 60, you must be honest with yourself. You did not understand the core material. You may have memorized answers rather than learning concepts. In this scenario, you must strip the foundation. Go back to the lectures. Reread the book. You need to relearn the why, not just the how. Do not rush to retake the exam until your practice scores are consistently in the 80s. 6-point for exam day psychology, reducing anxiety and maximizing focus. The Prometric Center is designed to be sterile and intimidating. The security protocols, the lockers, and the silence are all engineered to strip you of comfort. Imposter syndrome thrives in this environment. Your heart rate will spike when the timer starts. This is a biological fight-or-flight response. Your body is diverting blood from your prefrontal cortex, logic, to your muscles, action. This makes you stupid exactly when you need to be smart. You must have a protocol to override this physiology. We call this the tactical pause. The first 5 minutes. Do not answer a single question immediately. When the clock starts, take the first 2 minutes to write down your brain dump on your scratch paper. Write down the formulas you are terrified of forgetting. Write down mnemonics. Write down a motivational quote. This transfers the anxiety from your working memory onto the paper. It clears the RAM of your brain. Once that is done, take 3 deep, diaphragm breaths. Tell yourself, I am the expert here. This is just a work paper. Then, look at question 1. Managing the panic moment. At some point during the exam, you will hit a testlet that looks like it was written in a foreign language. You will read a simulation and have absolutely no idea where to start. Panic will try to set in. Recognize the panic. Label it. Say internally, I am panicking right now, and that is unhelpful. Close your eyes for 10 seconds. Disengage from the screen. Remind yourself that you can fail this specific simulation and still pass the exam. You are looking for points, not perfection. Then, open your eyes and find one thing in the simulation you can answer. Fill in the zeros. Answer the easy drop-down. Action kills anxiety. Once you start moving, the momentum will return. The finish line. As you approach the end of the exam, fatigue will try to trick you into submitting early. Your brain will scream, just get me out of here. Resist this urge. If you have 5 minutes left, use them. Reread the requirements of the written communication or double-check your negative signs. Games are won and lost in the final minutes. Walk out of that testing center with your head high. You controlled the variable you could control, your effort. The score is out of your hands now. Go get a burger, go to sleep, and trust the process we have built.
Chapter 7. Crossing the Finish Line, Ethics, Experience, and Licensure. Sections. Section 7.1. The AICPA Ethics Exam, Preparation and Passing Requirements. Section 7.2. Securing the Work Experience Requirement, Verifying Supervisors and Hours. Section 7.3. Navigating the State Board Application for Final Licensure. Section 7.4. Maintaining the License, Understanding CPE Cycles and Reporting. In Chapter 6, we discussed the mental fortress required to withstand the marathon of testing. We talked about endurance, burnout, and the psychological warfare involved in staying the course. If you are reading this chapter, I hope it is because you have seen that fourth passing score, or you can see the finish line clearly on the horizon. There is a strange phenomenon that happens the day you pass your final section. You feel an overwhelming surge of relief, followed immediately by a profound silence. The study routine we built in Chapter 4 is suddenly obsolete. The beast we analyzed in Chapter 3 has been slain. But here is the reality check that catches many off guard: passing the exams does not make you a CPA. You are currently in a unique purgatory. You have the knowledge, but you do not have the license. You have run the race, but the judges haven't handed you the medal yet. This chapter is about the administrative last mile, which, if navigated poorly, can delay your licensure by months. We are going to walk through the logistics of turning those passing scores into a wall-mountable credential. We will cover the ethics exam, the verification of your work experience, and the final application to the State Board. Figure: a clean, isometric vector illustration showing a runner crossing a finish line tape, but the path continues toward a podium labeled licensure. The path is paved with documents labeled ethics, experience, and application. The lighting is bright and encouraging, using a blue and gold color palette. 7.1 The AICPA Ethics Exam, the forgotten fifth section. For many candidates, the realization that there is one more test is heartbreaking. However, unlike the core or discipline sections, the professional ethics exam is not designed to weed you out. It is designed to ensure you understand the rules of the road before you get behind the wheel. Not every state requires the AICPA ethics exam. A handful of state boards administer their own localized version. However, the vast majority utilize the standard self-study course provided by the AICPA. You need to verify your specific jurisdiction's requirement immediately. The format is straightforward. It is an open book, multiple-choice exam taken online. You will typically purchase a self-study text, often a PDF or online module, study the material, and then take the test. Preparation strategy. Do not underestimate this just because it is open book. The questions are nuanced. They often present scenarios involving independence, conflicts of interest, and acts discreditable to the profession. The standard passing score is usually 90%. This is significantly higher than the 75% required for the CPA exam sections. If you fail, you can retake it, but repeated failures may lock you out or require repurchasing the materials depending on current AICPA rules. Your strategy should be efficiency. Read the text once to understand the structure of the AICPA Code of Professional Conduct. Understand where the rules for independence live versus the rules for general standards. When taking the exam, utilize the search function within the PDF materials. The exam tests your ability to locate and apply specific rules, not your ability to memorize them. Treat it like a research simulation. Component details. 7.2 Securing the Work Experience Requirement. While the exams prove you have the technical knowledge, the work experience requirement proves you can apply it in the real world without burning the building down. This is the apprenticeship phase of your journey. Historically, this required 2 years in public accounting auditing. Today, the requirements are more flexible, but they are also more specific regarding verification. Most jurisdictions now require 1 year, 2,000 hours of experience. This experience generally falls into 2 buckets: public accounting or industry government non-profit. The critical factor is not just where you work, but who you work for. The active CPA supervisor. In almost all jurisdictions, your experience must be verified by an active CPA. This person must have held their license during the time they supervised you. This is a common stumbling block for accountants working in private industry or startups. If your direct manager is not a CPA, you need to be proactive. Some states allow a second signer or a higher-level manager who is a CPA to verify your work, provided they have sufficient knowledge of your duties. Do not wait until you are applying for the license to figure this out. If you are working for a CFO who let their license lapse 10 years ago, that time may not count. Have this conversation early. Documenting your time. You do not need to log every minute like a timesheet, but you do need to document the duration and the nature of the work. The experience usually needs to demonstrate skills in accounting, attest, compilation, management advisory, financial advisory, tax, or consulting. If you are in a specialized role, say, strict data entry or heavy IT implementation without financial reporting, ensure your state board accepts this as qualifying experience. Figure, a split-screen comparison infographic. Left side shows a public accounting path with icons for audit and tax. Right side shows industry government path with icons for corporate finance and internal audit. Both paths converge at a central checkbox labeled Verified by Active CPA. Minimalist, professional style. 7.3 Navigating the State Board application. Once you have your exam credits, your ethics score, and your signed experience verification, you are ready to apply for the license itself. This is distinct from applying for the exam. This is their application for initial licensure. This process is handled by your State Board of Accountancy, not NASBA, though NASBA often assists with the document transfer. This step is purely bureaucratic, meaning it requires extreme attention to detail. The character and fitness investigation. You will likely undergo a background check. The application will ask if you have ever been convicted of a crime. This is the moment for radical honesty. Many candidates panic over a speeding ticket from college or a minor misdemeanor from a decade ago. In most cases, minor offenses will not bar you from licensure. However, lying about them or omitting them almost certainly will. If the application asks for all incidents, list them. Provide the court documents if requested. The board is looking for integrity. Hiding a past mistake is a current ethical failure. The transcript trap. Again, even though you sent transcripts to sit for the exam, some state boards require a fresh set for licensure to confirm you have met the specific 150-hour rule. Remember, the requirements to sit for the exam, often 120 hours, are different from the requirements to be licensed, 150 hours. Ensure you have officially graduated and that those final 30 credits are visible on the transcript you send. 7.4 Maintaining the license, CPE and reporting. Congratulations! Once the board approves your application, you will receive your license number. You are now a CPA. You can update your LinkedIn, order new business cards, and frame the certificate. But the moment you are licensed, a new clock starts ticking, continuing professional education, CPE. The profession acknowledges that tax laws change, accounting standards evolve, and technology shifts. To keep your license, you must prove you are keeping up. The reporting cycle. Most states operate on a reporting cycle, typically every 2 or 3 years. You are generally required to complete 40 hours of CAPE per year, or 120 hours over a 3-year rolling period. Do not treat CPE as a box-checking exercise. This is your opportunity to pivot your career. If you want to move from audit to forensic accounting, use your CPE budget to take forensic courses. The ethics requirement. Almost every state mandates that a portion of your CPE, usually 2 to 4 hours, be specifically dedicated to ethics. This ensures that even seasoned partners are reminded of their professional obligations. Keep digital copies of every certificate of completion. If you are audited by the state board, and they do audit random CPAs, you must produce proof of every hour you claimed. Figure, a circular flow diagram illustrating the CPE life cycle. Steps include 1. Identify learning needs, 2. Select qualifying activities. 3. Complete training. 4. Record credits and retain proof. 5. Report to State Board. The cycle repeats. The design should be clean, using arrow flows to indicate a continuous process. The final reflection. You have gone from understanding the why in Chapter 1 to navigating the bureaucracy of licensure in Chapter 7. This journey has likely taken you a year or more. It has required sacrifice, money, and mental bandwidth. But now, you are part of a community that serves as the backbone of the global economy. You possess a designation that commands respect and signifies trust. The blueprint is now yours. You have the foundation, the tools, and the credentials. The only thing left to do is to go out and build your career.
Chapter 8, The Career Fork, Navigating Public Accounting, Industry, and Government. Sections, Section 8.1, The Big Four Experience, Evaluating the Pros, Cons, and Exit Opportunities. Section 8.2, Regional and Local Firms, Finding Work-Life Balance Without Sacrificing Growth. Section 8.3, Corporate Accounting and Finance, The Path to Controller and CFO. Section 8.4, Exploring Non-Traditional Paths, Forensic Accounting, Consulting, and Government. In Chapter 7, we navigated the final administrative hurdles of licensure. You learned that the CPA designation is a credential, a seal of competence that signifies you have met a rigorous standard. But a license sits in a frame on the wall. A career is what you do every day when the alarm goes off at 6 a.m. Now comes the pivotal moment. I often tell mentees that passing the CPA exam gives you leverage. Before the license, you are begging for a seat at the table. After the license, you are choosing which table you want to sit at. This chapter is about choice. The accounting profession is not a monolith, it is a sprawling ecosystem with distinct habitats. You can spend your life auditing Fortune 500 inventory systems, catching white-collar criminals for the FBI, or guiding a tech startup to its IPO as a controller. The danger lies in drifting. Too many young accountants slide into a job because a recruiter called them, only to wake up 5 years later in a role that contradicts their personality and life goals. We are going to map the terrain so you can make an intentional decision about where to invest your most valuable asset, your time. 8.1 The Big Four Experience, Bootcamp for the Boardroom. For decades, the standard advice for high-achieving accounting students has been, do your time in the Big Four. Deloitte, PwC, EY, and KPMG act as the finishing schools for the corporate elite. There is truth to this, but the landscape is shifting. I view the Big Four not as a career destination, but as an extension of your education. It is paid graduate school where the tuition is your sleep and your social life. The value proposition. The primary asset you gain from the Big Four is the brand equity on your resume. When a hiring manager sees Big Four Senior Associate on a CV, they make immediate assumptions about your competence. They assume you have a high threshold for pain, you understand rigorous control environments, and you have been trained by the best. The second asset is the network. You will be in the trenches with hundreds of other smart, ambitious people. Fast forward 10 years, and those people are controllers, VPs of finance, and partners. That alumni network is powerful currency. The cost of admission. However, the cost is tangible. During busy season, you are essentially inventory. The hours can be brutal, ranging from 60 to 80 hours a week. You may find yourself auditing cash accounts for a client across the country, eating takeout in a conference room at midnight. If you value autonomy and work-life balance immediately out of the gate, this environment will crush you. It is a rigid hierarchy designed to churn through bodies to find the few who fit the partner mold. Figure, extra detailed AI-ready prompt for AI-generated diagram showing a career trajectory funnels for Big Four accounting. The visual should be a funnel shape. At the top, wide end, label staff associate, years 0 to 2, with many silhouette figures. The middle section narrows to the senior associate, years 3 to 5, the golden exit window, showing arrows pointing out of the funnel toward buildings labeled Fortune 500, tech startups, and banking. The bottom narrow section is labeled manager partner track, with very few figures remaining. Use a clean, professional infographic style with blue and gray tones. The exit strategy. If you choose this path, you must be strategic. The golden window to leave the Big Four is usually right after you make senior associate, roughly 2 to 3 years in. At this stage, you have proven you can supervise others, but you aren't so expensive that industry firms can't afford you. If you stay until manager, you risk being pigeonholed into technical accounting roles that limit your exit options to internal audit or financial reporting. 8.2 Regional and local firms, the generalist's playground. If the Big Four is about specialization, learning more and more about less and less, regional and local firms are about breadth. At a massive firm, you might spend 3 months auditing the revenue cycle of a single pharmaceutical giant. At a regional firm, you might handle the audit, the tax return, and the consulting for a local manufacturing family business all in the same month. Connection to the client. The biggest psychological difference here is the impact. In the Big Four, your client is often a controller who views you as a necessary annoyance. In a local firm, your client is often the business owner. When you save a small business owner $20,000 in taxes or help them structure a succession plan, you see the relief on their face. You are a trusted advisor, not just a compliance officer. This offers a level of emotional satisfaction that is rare in global public accounting. Work-life balance reality check. Do not assume smaller firm equals 9 to the 5. April 15th is the same date for everyone. However, local firms generally offer more flexibility. They are less likely to ship you across the country for weeks at a time. The trade-off is the exit opportunity. While you will become a fantastic accountant, you may struggle to land a role at a Fortune 100 company later. Those companies use distinct software and frameworks, like SOX compliance, that you might not touch at a local firm. Choose this path if you enjoy variety, want to see how small businesses operate, or have aspirations to open your own firm one day. 8.3 Industry, the path to controller and CFO. Public accounting is about verifying what happened in the past. Corporate accounting, industry, is about building the future. In public, you are an external vendor. In industry, you are part of the team. You stop tracking your life in 6-minute billable increments and start focusing on operational value. The operational shift. The rhythm of industry is dictated by this month-end close. This is a cyclical process where you reconcile the books, produce financial statements, and report to management. Between closes, your job is optimization. You might implement a new ERP system, analyze product margins to see which SKUs are losing money, or work with the sales team to structure commission plans. The hierarchy. The typical ladder in industry looks like this. Staff accountant, journal entries, reconciliations, AP/AR processing. Senior accountant, complex accruals, financial statement preparation, variance analysis. Accounting manager, overseeing the team, reviewing work, managing the audit relationship. Controller, the chief accounting officer. Responsible for historical accuracy and controls. CFO, the strategic partner. Focused on capital structure, forecasting, and investor relations. The risk of stagnation. Figure, extra detailed AI-ready prompt for AI-generated diagram showing the corporate finance ladder. A stepped structure rising from left to right. Bottom step, staff accountant, the technician. Next step, senior accountant, the analyst. Middle step, controller, the gatekeeper. Top step, CFO, the strategist. Under each step, include bullet points of key skills required, e.g., under CFO, capital allocation, investor relations. Use a sleek, modern corporate aesthetic with icons representing each role. The danger in industry is comfort. The pay is generally better than public accounting starting out, and the hours are predictable. This creates golden handcuffs. If you stay in a staff accountant role for 5 years because the job is easy, your skills will atrophy. In public accounting, you are forced to learn new things constantly. In industry, you must self-motivate to learn new software or take on new projects to keep your career moving upward. 8 point for non-traditional paths, the road less traveled. Your CPA license is a Swiss Army knife. It opens doors that have nothing to do with debits and credits. If the idea of a month-end close makes you cringe, consider these alternatives. Forensic accounting. This is the CSI of the accounting world. Forensic accountants trace funds, quantify damages in lawsuits, and uncover embezzlement. It requires a curious mind and an eye for patterns that don't fit. The work is project-based and often adversarial. You might end up testifying in court as an expert witness. It is high stakes, intellectually demanding, and highly paid. Government and regulatory. Agencies like the FBI, IRS, and the GAO aggressively recruit CPAs. The FBI hires CPAs as special agents to investigate white-collar crime, money laundering, and terrorist financing. The IRS offers roles in their Criminal Investigation Division, IRSCI, where you carry a badge and a gun. The trade-off here is clear: you get unparalleled job security, a government pension, and a 40-hour workweek. However, your salary ceiling is capped by government pay grades, GS scales, which will eventually lag behind what you could earn in the private sector. Advisory and consulting. Many CPA firms have advisory arms that focus on M&A, mergers and acquisitions, valuation, or IT risk. In these roles, you aren't auditing. You are solving specific problems. A client buys a competitor and needs help integrating two accounting systems. That's advisory. This is often the most lucrative path, but it is volatile. Consulting budgets are the first thing cut during a recession. Summary of paths. Career path: primary focus, stress level, exit opportunities, ideal for. Reflection. There is no right choice, only the choice that fits your season of life. I started my career in a regional firm because I wanted to see how businesses worked from the ground up. Later, I moved to industry to understand the operational side. The beauty of the CPA is that you are rarely stuck. The technical foundation you built in chapters 3 through 6 allows you to pivot. Don't let the prestige of a firm or the salary of a specific role dictate your happiness. Look at the day-to-day work. If you hate conflict, do not go into forensic accounting. If you hate routine, do not go into corporate reporting. Know yourself, use the leverage your license provides, and take the seat at the table that you actually want.
Chapter 9. Beyond the Ledger, Essential Soft Skills for the Modern CPA. Sections. Section 9.1. Translating Complex Data into Business Insights for Non-Accountants. Section 9.2. Client Relationship Management, Building Trust and Authority. Section 9.3. Effective Business Writing, Crafting Memos, Emails, and Reports. Section 9.4. Presentation Skills, Delivering Financial Results with Confidence. In Chapter 8, you stood at the fork in the road and chose your path. Whether you are now sitting in a sleek audit room in a high-rise, navigating the corporate halls of industry, or serving the public sector, you have secured your seat at the table. But getting the seat is the easy part. Keeping it and commanding respect while you are there requires a skill set that the CPA exam barely tested. The biggest lie told to accounting students is that technical brilliance is enough. I have seen brilliant technical accountants stagnate in middle management because they could not explain a variance analysis to a sales director without inducing a coma. Conversely, I have seen average technicians rise to CFO because they knew how to tell the story behind the numbers. This chapter is about the software that runs on your hard skills. We are moving beyond the debits, credits, and tax codes. We are focusing on translation, influence, and communication. These are the tools that turn a number cruncher into a trusted advisor. 9.1 Translating complex data into business insights. The language of business is accounting, but not everyone speaks it fluently. Your job is not just to maintain the books, it is to act as the interpreter. When you hand a set of financials to a non-accountant, you are handing them a map written in a foreign tongue. Your value is defined by your ability to bridge the gap between GAAP compliance and commercial reality. You must learn to strip away the jargon and reveal the narrative. Data without context is just noise. If you tell a marketing manager that advertising expense is unfavorable by 15%, they will likely get defensive. If you tell them, our customer acquisition cost jumped $50 per unit because the new campaign isn't converting, you have given them an actionable insight. Figure, a detailed, split-screen infographic-style illustration. On the left side, a dark, chaotic pile of binary code, spreadsheets, and complex mathematical formulas labeled raw data. On the right side, a clean, bright minimalist icon of a light bulb illuminating a path forward labeled actionable insight. A bridge connects the two sides, constructed of stylized speech bubbles and human silhouettes shaking hands. The color palette should be professional navy and gold. The so what? Framework. To move from reporting to advising, apply the so what test to every analysis you perform. Before you hit send on an email or walk into a meeting, look at your numbers and ask yourself, so what? If revenue is up 10%, so what? Is it because we sold more units, volume, or because we raised prices, rate? If we raised prices, did we lose market share? Keep asking until you hit the root cause that a business owner cares about. Here is the hierarchy of insight you should aim for. Descriptive, the what revenue is down $50,000. Level 1, the ledger. Diagnostic, the why revenue is down because the Northeast region had a supply chain delay. Level 2, the analyst. Predictive, the future if this continues, we will miss Q3 targets by 12%. Level 3, the advisor. Prescriptive, the solution we should reroute inventory from the Midwest hub to mitigate the loss. Level 4, the leader. Most young CPAs stop at level 2. Your goal is to live at levels 3 and 4. Visualizing the narrative. A wall of text or a dense spreadsheet is the quickest way to lose your audience. Humans process visuals 60,000 times faster than text. When presenting data to non-accountants, your visualization choices matter. Avoid 3D charts, they distort data. Avoid pie charts with more than 3 slices, they are hard to compare. Stick to bar charts for comparisons and line charts for trends. Use color intentionally. Red should always mean attention needed, not just a design choice. 9.2 Client relationship management, building trust and authority. In public accounting, you have clients. In industry, you have stakeholders. In both cases, you are in the service business. The technical work is simply the commodity you sell, the relationship is the delivery vehicle. Trust is the currency of the accounting profession. Unlike a doctor who can cure you even if you dislike them, an accountant cannot effectively advise a client who does not trust them. Trust allows you to ask difficult questions and deliver bad news without being shot as the messenger. The trust equation. There is a simple mental model for this. Trust equals credibility plus reliability plus intimacy, self-orientation. Credibility. Do you know your stuff? You passed the CPA, so yes. Reliability. Do you do what you say you will do, on time, every time? Intimacy. Do you understand their business fears and goals? Can they confide in you? Self-orientation. Who do you care about more, them or yourself? The denominator is the killer. If a client senses you are recommending a service just to meet your firm's billing quota, trust evaporates. If a stakeholder feels you are blocking a project just to avoid extra work for your department, you lose your seat at the table. Managing expectations. The quickest way to destroy a relationship is surprise. In accounting, surprises are rarely good. Underpromise and overdeliver is a cliché, but communicate early and often is a survival tactic. If a tax return is going to be late, tell the client 3 weeks before the deadline, not 3 days before. If an audit adjustment is going to wipe out a bonus pool, do not bury it in a draft report. Pick up the phone. New CPAs often hide from bad news, hoping it will resolve itself. It never does. It festers. Bringing a problem to light immediately along with a proposed solution builds authority. It shows you are in control, even when the situation is chaotic. Figure, a clean, conceptual vector illustration showing a trust ladder. The bottom rung is labeled vendor processor. The middle rungs are subject matter expert and problem solver. The top rung, glowing slightly, is labeled trusted advisor. A silhouette of a professional is climbing the ladder, with the background transitioning from a gray cubicle environment at the bottom to a boardroom with a view at the top. 9.3 Effective business writing, crafting memos, emails, and reports. I have reviewed thousands of emails from associates. The most common mistake is burying the lead. We are trained in school to write mystery novels, introduction, supporting evidence, more evidence, and finally, the conclusion. In business, nobody has time for the mystery. They want the answer first. The BLUF method, bottom line up front. Every professional email or memo should start with the bottom line up front. State the conclusion, the request, or the decision in the very first sentence. Compare these two examples. The traditional, ineffective, approach. Hi Susan, I was looking at the fixed asset ledger and noticed that the depreciation schedule for the new machinery was set to 7 years. I checked the tax code and IRS publication 946 regarding MACRS property classes. It seems that for this specific type of manufacturing equipment, the asset life should actually be 5 years. This will change our depreciation expense. Should I make the adjustment? The BLUF, effective, approach. Hi Susan, action required. Approval to adjust depreciation life from 7 years to 5 years. ***, the second email respects Susan's time. It tells her what to do, why, and what happens next. It is scannable and decisive. The tone of authority. Passive voice is the enemy of authority. Mistakes were made sounds defensive. We made an error in the calculation sounds accountable. Avoid hedge words like I think, maybe, sort of, or basically. If you are unsure, say I will verify this. If you are sure, state the fact. When writing formal technical memos, the kind that protect the firm during a lawsuit, structure is your safety net. Use a standard format: issue, facts, authority, guidance, analysis, and conclusion. This mirrors the research simulations you tackled in the CPA exam. It forces logical thinking and provides a clear audit trail. 9.4 Presentation skills, delivering financial results with confidence. Public speaking ranks higher than death on many fear indexes. For accountants, the fear often stems from the imposter syndrome we discussed in Chapter 6. You worry someone in the room knows more than you. Here is the secret: you are the one who did the work. You are the expert in the room on this specific dataset. The CEO knows strategy, but you know the reconciliation. Lean on that preparation. The rule of 3. When presenting financial results, the audience will remember 3 things max. If you present a slide with 20 rows of data, they will remember nothing. Pick the 3 distinct points that matter. 1. Revenue is up due to the new product line. 2. Margins are squeezed due to raw material costs. 3. Cash flow is healthy enough to support the expansion. Everything else belongs in the appendix. Slide design for non-designers. Your slides are not your teleprompter. If you are reading your slides, you are redundant. The slide should provide visual evidence for what you are saying. 1 idea per slide. Headline as a statement. Don't title a slide Q3 expenses. Title it Marketing spend drove Q3 expense variance. Highlight the variance. Don't make the audience do the math. Circle the key number. Use arrows. Handling Q&A. Figure, a photorealistic mock-up of a presentation setting. The focal point is a projector screen showing a high-contrast, simple slide. The slide title reads Q3 Strategy, Cash Conservation. It features a single, clear downward trend line in red, annotated with a specific dollar amount. In the foreground, the back of a presenter's head and shoulder is visible, gesturing toward the screen. The lighting is focused on the screen, emphasizing clarity over clutter. The Q&A session is where your credibility is truly tested. When an executive asks a question you don't know the answer to, never guess. Guessing is how you get fired. The correct answer is, that is a great question. I want to be precise, so let me pull the detail on that and have an answer to you by end of day. Then, make sure you actually do it. Closing thoughts. These soft skills, translation, relationship building, writing, and presenting, are force multipliers. A CPA with average technical skills but excellent soft skills will almost always outperform a technical genius who cannot communicate. You have spent years learning the rules of accounting. Now, you must learn the rules of business. The ledger is where you start, but it is not where you stay. In the next chapter, we will look ahead. The profession is changing rapidly with the influx of AI and automation. We will discuss how to future-proof your career so that you remain the architect of the system, rather than a cog within it.
Chapter 10, The Digital Accountant, Leveraging Technology and Data Analytics. Sections, Section 10.1, Advanced Excel Mastery, Functions Every CPA Must Know, Section 10.2, Introduction to Data Visualization Tools, Power BI and Tableau Basics, Section 10.3, Understanding Automation and AI, Shifting from Data Entry to Analysis, Section 10.4, Cybersecurity Awareness, Protecting Sensitive Financial Data. In Chapter 9, we focused on the human side of the profession, the ability to communicate, negotiate, and lead. We established that soft skills are the bridge between raw numbers and business decisions. But bridges need a solid foundation, and in the modern accounting era, that foundation is built on data. For decades, the accountant was viewed as the historian of the business. We looked backward, recording what happened last month or last year. That era is over. The modern CPA is expected to be a futurist, using data to predict trends, identify risks, and drive strategy before the month even closes. The most dangerous phrase in our profession is, "We've always done it this way." Reliance on manual entry and disjointed spreadsheets is not just inefficient, it is a liability. To survive and thrive, you must evolve from a number cruncher into a data architect. This chapter is your technical toolkit. We are moving beyond basic debits and credits into the systems that house them. We will sharpen your Excel skills to a razor's edge, introduce the power of visualization, and demystify the role of artificial intelligence in our field. 10.1 Advanced Excel Mastery, Functions Every CPA Must Know. Despite the rise of fancy software suites, Excel remains the sandbox of the financial world. It is where data goes to be cleaned, analyzed, and modeled. I have seen Ivy League graduates struggle during busy season simply because they were slow in Excel. You do not need to know every function. You need to know the functions that save time and reduce risk. Speed in Excel is not about typing fast, it is about using the tool to do the heavy lifting so you can focus on the analysis. We are going to retire VLOOKUP immediately. It is brittle, slow, and breaks if you insert a column. Your new best friend is XLOOKUP. The power of XLOOKUP. XLOOKUP allows you to look for a value in one array and return a value from another, regardless of position. It defaults to an exact match, eliminating the most common error in legacy lookups. Here is the syntax you will use to reconcile a subledger to the general ledger. Equals XLOOKUP, lookup underscore value, lookup underscore array, return underscore array, if underscore not underscore found, match underscore mode. Imagine you have a list of invoice IDs in column A and need to pull the corresponding amounts from a messy data dump in sheet 2. Equals XLOOKUP, A2, sheet 2, CC, sheet 2, FF, not found, 0. This formula searches for A2 within column C of sheet 2 and returns the value from column F. If it's missing, it explicitly tells you not found rather than throwing a generic error code. This simple change cleans up your work papers instantly. Dynamic arrays and spill errors. Figure, extra detailed AI-ready prompt for AI-generated diagram showing a split-screen comparison. On the left, a old way of lookup causing a #ref. Error because a column was inserted. On the right, a new way XLOOKUP remaining stable and highlighting the correct data path in bright green. The visual style should be sleek, technical, and schematic, similar to a high-end software manual. Modern Excel handles data dynamically. Functions like unique, sort, and filter allow you to manipulate entire datasets with a single formula. If you are auditing a vendor list and need to spot duplicates or pull a unique list for confirmation letters, do not manually delete rows. Use the unique function. Equals unique A2, A1000. This formula will spill the results into the cells below automatically. If you see a hash spill error, it simply means there is existing data blocking the results. Clear the path, and the data flows. The pivot table mindset. Formulas are great for precision, but pivot tables are for exploration. When you receive a raw trial balance with 50,000 rows, you cannot read it line by line. You need to aggregate it. Master the tabular form layout. By default, pivot tables group data in a compact hierarchy that is hard to copy-paste. 1. Go to Design tab. 2. Select Report Layout Show in tabular form. 3. Select Repeat all item labels. Now you have a flat, clean dataset that summarizes millions of dollars in seconds. This allows you to spot variances, like a sudden spike in your miscellaneous expenses, without getting lost in the weeds. 10.2 Introduction to Data Visualization Tools, Power BI and Tableau Basics. Excel creates tables, visualization tools create stories. A CFO does not want to stare at a spreadsheet with 40 tabs. They want a dashboard that answers 3 questions: are we profitable? Where are we bleeding cash? What happens next? Tools like Microsoft Power BI and Tableau allow you to connect directly to the database, bypassing the manual export-import cleanup process that causes version control nightmares. The difference between reporting and visualization. Reporting is static. It is a PDF of the balance sheet sent at month end. Visualization is dynamic. It is a live dashboard where the controller can click on Western Region and watch the revenue charts instantly update to reflect only that territory. When building a visualization, follow the 5-second rule. If a stakeholder cannot understand what the chart is telling them within 5 seconds, you have failed. Practical application: the audit dashboard. Figure: extra detailed AI-ready prompt for AI-generated diagram showing a bad versus good dashboard layout. The bad side is cluttered with 3D pie charts, distracting colors, and too much text. The good side features clean bar charts, a clear KPI card at the top showing net profit, and a consistent color palette, blues and grays. Lighting should be professional and focused on the UI elements. Imagine you are performing a risk assessment for revenue. Instead of sampling 25 random invoices, you load the entire revenue subledger into Power BI. You create a scatter plot with *x-axis, date of transaction *y-axis, dollar amount *color, user ID. Suddenly, you see a cluster of high-value transactions posted on a Sunday night by a single user. In a spreadsheet, this pattern is invisible. In a visualization, it screams for attention. This is how the digital accountant finds the needle without burning down the haystack. 10.3 Understanding Automation and AI, Shifting from Data Entry to Analysis. There is a pervasive fear that AI will replace accountants. Let me be clear, AI will not replace accountants. However, accountants who use AI will replace those who do not. We are shifting from a creation economy to a review economy. In the past, you spent 90% of your time creating the journal entry and 10% reviewing it. Automation flips that ratio. Robotic Process Automation, RPA. RPA is essentially a software robot that mimics human keystrokes. It is perfect for high-volume, repetitive tasks that require no judgment. Think about the accounts payable process. An invoice arrives via email. A human opens the PDF, reads the amount, types it into the ERP system, and drags the email to a folder. RPA can do this 24/7 without coffee breaks and without typos. Your role changes from data enterer to system architect. You monitor the bot. You handle the exceptions, the blurry invoice the bot couldn't read. This elevates your value proposition from clerical work to problem solving. Generative AI as a junior associate. Treat tools like ChatGPT or Microsoft Copilot as a brilliant but occasionally hallucinating intern. They are excellent for drafting technical memos, summarizing new accounting standards like ASC 842, or writing Excel formulas for you. If you are stuck on a complex formula, prompt the AI, "I need an Excel formula that sums column C only if column A contains a revenue and column B is greater than 1,000. It will generate the sum if syntax for you immediately. However, you must maintain professional skepticism. Never input sensitive client data or PII, personally identifiable information, into public AI models. And always verify the output. You are the licensed professional, the algorithm is just a tool. Figure, extra detailed AI-ready prompt for AI-generated diagram illustrating the human-in-the-loop workflow. A robotic arm passes a glowing data block to a human professional. The human inspects it with a magnifying glass before placing it into a final structure labeled strategy. The background should be a digital wireframe representing the flow of information. 10-point for cybersecurity awareness, protecting sensitive financial data. As you leverage these digital tools, you expose yourself to new risks. Accountants hold the keys to the kingdom: bank account numbers, social security numbers, and payroll data. We are high-value targets for cybercriminals. Cybersecurity is not just an IT problem, it is an ethical obligation. A breach doesn't just cost money, it destroys the trust capital you spent years building. The human firewall. The weak link in any security system is rarely the software, it is the person sitting in the chair. Phishing attacks have become sophisticated. You will not see a generic Nigerian prince email. You will see an email that looks exactly like a OneDrive file share request from your CFO. Before you click, hover. Check the actual URL. If the request involves transferring funds or changing vendor bank details, pick up the phone. Verify voice-to-voice. Data hygiene and governance. When you export data to Excel or Power BI, you are taking it out of the secure environment of the ERP. Where are you saving that file? Is it on an unencrypted USB drive? Is it in a personal Dropbox? Treat every dataset as toxic waste. It must be handled with protective gear and stored in designated containment areas. Encryption. Ensure your laptop and external drives are encrypted. BitLocker for Windows, FileVault for Mac. Access control. Apply the principle of least privilege. Do not give a junior staff member access to the entire payroll database if they only need to audit overtime hours. Two-factor authentication. 2FA. Enable this everywhere. It is the single most effective barrier against unauthorized access. The digital accountant is powerful, but power without security is recklessness. Protect your data as fiercely as you protect your reputation.
Chapter 11. Climbing the ladder, from senior associate to manager and beyond. Sections. Section 11.1, Mastering Delegation, Transitioning from DOR to Reviewer. Section 11.2, Project Management Fundamentals for Audit and Tax Engagements. Section 11.3, Networking Internally and Externally to Build a Professional Brand. Section 11.4, Mentoring Junior Staff, Developing the Next Generation of Talent. In Chapter 10, we embraced the digital evolution of accounting. We discussed how data analytics and automation are stripping away the mundane tasks that used to consume a staff accountant's day. But tools, no matter how advanced, cannot manage client expectations, navigate office politics, or inspire a burnt-out team member during the final week of busy season. Now, we address the vertical climb. The transition from senior associate to manager is widely considered the most difficult leap in the accounting profession. As a staff or senior, your value is defined by your production. You are the engine. Your goal is to be technically accurate and efficient. But the moment you reach for the manager title, the rules of the game change entirely. You are no longer judged solely on your ability to do the work, you are judged on your ability to ensure the work is done by others, often while juggling multiple engagements and shrinking budgets. This chapter is your survival guide for that transition. We will dismantle the super senior trap, learn the mechanics of engagement economics, and discuss how to build a brand that opens doors to the partnership or the C-suite. 11.1 Mastering Delegation, Transitioning from door to reviewer. The biggest mistake high-performing seniors make is believing that delegation is simply assigning tasks. They view it as a necessary evil, often thinking, it would be faster if I just did this myself. In the short term, you are right. You can do it faster. You can do it better. But this mindset is a career killer. If you continue to act as the primary producer, you become the bottleneck. You limit the growth of your team, and you cap your own capacity to take on higher-level strategy. True delegation is not about offloading work, it is about duplicating competence. It requires a shift from being a fixer to being a teacher. The reviewer's mindset. When you transition to a reviewer role, you must stop looking at a work paper simply to see if the numbers tie. You must look at the logic, the documentation, and the risk. Effective review happens in layers. First, check the mechanical accuracy. Second, assess the accounting theory or tax position. Third, and most importantly, evaluate the narrative. Does this work paper tell a story that a peer reviewer or auditor 5 years from now will understand without you in the room? Use the teaching note approach. When you find an error, do not just correct it. Leave a review note explaining why it is wrong and how to prevent it next time. If you fix it silently, you guarantee you will have to fix it again on the next engagement. Figure, AI-ready prompt for a diagram showing the delegation loop. A circular flowchart with 4 distinct quadrants. Quadrant 1, Instruction, icon of a blueprint. Quadrant 2, Execution, icon of gears turning. Quadrant 3, Review and Feedback, icon of a magnifying glass with a speech bubble. Quadrant 4, Correction and Reflection, icon of an upward trending arrow. The visual style should be clean, corporate minimalist, blue and gray color scheme, white background. The delegation framework. To delegate effectively without losing quality control, use a tiered approach based on the complexity of the task and the experience of the staff. Level description, best use case review style. Push your team toward level 3 and 4. It feels risky at first, but it is the only way to scale your own career. 11.2 Project Management Fundamentals for Audit and Tax Engagements. As a manager, you are essentially a small business owner. Your portfolio of clients is your business. You have revenue targets, fees, labor costs, staff hours, and a bottom line, realization. The technical accounting is the easy part. The hard part is logistics. You are managing timelines, client delays, staff vacations, and partner expectations simultaneously. Controlling the budget and scope creep. The silent killer of engagement economics is scope creep. This happens when a client asks for just a quick analysis or when the condition of the client's records is worse than anticipated. If the client's trial balance doesn't balance, or if they provide a showbox of receipts instead of a summary schedule, the budget is already blown. As a manager, you must identify this immediately. You need to have the change order conversation early. It sounds like this: we budgeted for a clean trial balance. Based on the data received, we will need to perform substantial cleanup work. This falls outside our original scope. We can either bill for the extra hours, or you can have your internal team clean it up before we proceed. WIP management. Work in progress, WIP, is inventory. Like inventory in a warehouse, if it sits too long, it spoils. Old WIP is harder to bill. The client has forgotten the value you provided 3 months ago. Your goal is to move from WIP to billable to collected as fast as possible. Review your WIP runs weekly, not monthly. If hours are piling up on a code, investigate immediately. Is the staff spinning their wheels? Is the engagement more complex than thought? Figure, AI-ready prompt for a dashboard visualization titled Engagement Control Center. The image should show a sleek, modern digital dashboard. Left panel, a Gantt chart showing overlapping timelines labeled Client A, Client B, and Client C. Center panel, Speedometer-style gauges showing budget burn rate, green to red gradient. Right panel, a checklist titled Critical Path Items. The lighting should be soft, professional office lighting, focusing on the screen. 11.3 Networking internally and externally to build a professional brand. Up to the senior level, you are promoted based on technical competence. Beyond manager, you are promoted based on your commercial value to the firm. This requires a strong professional brand. Your brand is what people say about you when you are not in the room. Internal branding, the go-to person. In a public accounting firm, your clients are the partners. You want to be the manager they fight over during scheduling meetings. To achieve this, you need a reputation for two things: reliability and specialized knowledge. Be the person who never drops a ball, but also try to carve out a niche. Maybe you are the expert on the new lease accounting standard, or you know the construction industry better than anyone else in the office. When a partner has a complex problem in your niche, you want your name to be the first one that pops into their head. External networking, planting seeds. You are likely not expected to sell work immediately as a new manager, but you must start planting seeds. The CFOs of tomorrow are the senior accountants you are working with today. Treat the client staff with the same respect you treat the controller. Build relationships based on helpfulness, not sales. The 30-minute coffee. Aim to have coffee or lunch with one person outside your firm every month. It doesn't have to be a sales pitch. Just catch up. Industry groups. Don't just join a generic networking group. Join a niche group relevant to your work, e.g., a real estate developer association or a non-profit board. LinkedIn. Stop lurking. Post insights about changes in tax law or accounting standards. Position yourself as a thought leader, even to a small audience. 11.4 Mentoring junior staff, developing the next generation of talent. The most rewarding part of moving up the ladder is the opportunity to shape careers. You will remember the managers who threw you under the bus, and you will remember the ones who taught you how to survive. Be the latter. Mentorship is a retention strategy. Staff are far less likely to leave for a $5,000 raise if they feel their manager is genuinely invested in their long-term success. The feedback loop. Waiting for the annual performance review to give feedback is a failure of management. Feedback must be real-time. Use the SBI model, situation, behavior, impact, to keep feedback objective and actionable. 1. Situation. During the inventory observation yesterday. 2. Behavior. You spoke over the client while they were explaining their process. 3. Impact. This made them defensive and made it harder for us to get the answers we needed. This removes emotion and focuses on professional growth. Advocacy. Part of mentoring is protection. When a partner sets an unrealistic deadline, it is your job to push back or negotiate resources to protect your team from burnout. If your team sees you fighting for them, getting them dinner during overtime, arguing for a deadline extension, or publicly praising their work to leadership, they will run through walls for you. Figure, AI-ready prompt for a split-screen illustration contrasting boss versus mentor. Left side, boss, a silhouette figure standing on top of a block, pointing a finger down at a struggling employee, cool blue tones, rigid geometry. Right side, mentor, a figure kneeling on one knee to be at eye level with the employee, offering a hand up, warm orange and yellow tones, softer lighting. The composition should symbolize support versus command. In the next chapter, we will look at the ultimate destination for many, partnership. But we will also look at the alternatives, starting your own firm or taking the C-suite path in industry, and how the skills you are building now are the foundation for all of them.
Chapter 12, Future-proofing your legacy, continuous learning and specialization. In Chapter 11, we dissected the arduous climb from individual contributor to management. We navigated the shift from being the engine of production to becoming the architect of team success. By now, you understand how to navigate office politics, manage client expectations, and lead a team through the trenches of a busy season. Sections. Section 12.1, Identifying emerging trends in global accounting standards. Section 12.2, Pursuing additional certifications, CMA, CFA, or industry-specific credentials, Section 12.3, giving back to the profession, volunteering and board membership, Section 12.4, final thoughts, the lifelong responsibility of the trusted advisor. But here is the hard truth about reaching the management tier: the ground beneath you never stops moving. The accounting profession is currently undergoing a metamorphosis faster than at any point in history. The technical knowledge that got you your license 3 years ago is likely already depreciating. If the CPA license is your foundation, continuous learning is the maintenance required to keep the house from crumbling. Legacy in this profession isn't defined by how quickly you pass the exams or how many hours you build in your 20s. It is defined by your relevance, your adaptability, and the specialized value you provide over decades. This chapter is about future-proofing. We are moving beyond the immediate demands of the job to look at the horizon. We will discuss how to stack credentials strategically, how to anticipate global shifts in standards, and ultimately, how to transition from a service provider to a pillar of the professional community. 12.1 Identifying emerging trends in global accounting standards. For decades, the standard for a good accountant was mastery of the current rules. If you knew US GAAP or Tax Code Section 179 inside and out, you were golden. Today, mastery of the current rules is merely the baseline. The real value lies in anticipating the next set of rules. We are operating in a borderless economy. Even if your clients are currently domestic, their supply chains, investors, and data storage are global. The convergence, and occasionally the divergence, of global accounting standards creates a complex landscape that requires vigilance. The most significant shift we are seeing today is the move from purely financial reporting to non-financial reporting. The numbers on the balance sheet tell us what the company owns, but they no longer tell the full story of how the company creates value. The rise of ESG and sustainability reporting. Environmental, social, and governance (ESG) reporting is no longer a buzzword for marketing brochures, it is becoming a regulatory inevitability. Investors are demanding transparency on carbon footprints, labor practices, and board diversity. As a CPA, you might think, I'm an accountant, not an environmental scientist. This is a dangerous mindset. The measurement, assurance, and reporting of these metrics fall squarely within our domain. We are the gatekeepers of data integrity, regardless of whether that data is dollars or carbon credits. To future-proof yourself here, you do not need to become a climate expert, but you must understand the frameworks, like SASB or the ISSB standards. You need to be the advisor who says, this supply chain risk isn't just a PR problem, it's a contingent liability we need to disclose. Figure, a detailed conceptual diagram illustrating the expanded reporting ecosystem. The visual should depict a traditional balance sheet and income statement in the center, surrounded by an orbiting ring of new metrics: carbon footprint, human capital ROI, data privacy compliance, and supply chain ethics. Arrows should flow from these outer metrics into the central financial statements, showing how non-financial risks translate into financial impact. The style should be clean, modern, and schematic, using a blue and green color palette to signify the blend of finance and sustainability. Global taxation and digital assets. Another frontier is the taxation of the digital economy. The Organization for Economic Cooperation and Development, OECD, is rewriting the rules on how multinational giants are taxed, moving away from physical presence to economic presence. Simultaneously, the treatment of cryptocurrency and digital assets remains a moving target. If you are not dedicating a few hours a month to reading emerging guidance on these topics, you are falling behind. Actionable strategy: curate your feed, stop relying on general news. Subscribe to specific technical feeds from the FASB, IASB, and major firm white papers. The 1 hour rule: dedicate 1 hour per week, put it on your calendar, to reading about a standard that does not currently apply to your desk but might in 2 years. 12.2 Pursuing additional certifications, CMA, CFA, or industry-specific credentials. I often compare the CPA license to a general practitioner's medical degree. It allows you to practice, and it commands respect. But if you have a specific heart condition, you go to a cardiologist. In the accounting world, clients and employers pay premiums for specialists. However, do not fall into the trap of credential collecting just to add letters to your email signature. Every certification requires maintenance, fees, and CPE. You must be strategic. You need to become a T-shaped professional, a broad base of general accounting knowledge, the CPA, with a deep vertical spike of specialization. The strategic breakdown. Let's look at the most common value-add credentials and who should pursue them. 1. The CMA, Certified Management Accountant, who it's for, the CPA who has moved, or wants to move, into industry, corporate accounting. The value, the CPA focuses on statutory reporting and tax compliance. The CMA focuses on strategic planning, budgeting, and decision-making performance. My take, if you want to be a CFO or controller, this is the most practical pairing with the CPA. It bridges the gap between the books are closed and here is how we increase profitability. 2. The CFA, Chartered Financial Analyst, who it's for, the accountant who wants to pivot into investment banking, portfolio management, or high-level valuation. The value, this is the gold standard for investment analysis. It is notoriously difficult. My take, only pursue this if you are serious about leaving traditional accounting for finance. It is overkill for a standard tax or audit career. 3. CITP, Information Systems and Technology, who it's for, the auditor who realizes that you cannot audit a company without auditing its code and controls, see Chapter 10. The value, as automation takes over manual entry, the ability to audit the system rather than the transaction is becoming the most valuable skill in public accounting. 4. Industry-specific credentials, CIFP, HFMA, etc. Who it's for, the professional who has found a home in a specific niche like construction or healthcare. The value, a construction industry CPA, CCIFP, speaks the language of work in progress schedules better than a generalist ever could. This is how you become indispensable to a specific client base. Before you sign up for another exam, ask yourself, does this credential solve a problem for the clients or employers I want to work with in 5 years? If the answer is no, skip it. Figure, a decision tree flowchart titled Credential Strategy Selector. The chart starts with a central node labeled CPA Base. It then branches into 3 paths. Path 1, Corporate Leadership leading to CMA MBA. Path 2, Finance and Valuation leading to CFA KBV. Path 3, Systems and Data leading to the CISA CITP. Path 4, Niche Mastery leading to Industry Certs. Each terminal node should have a small icon representing its focus, e.g., a chess piece for strategy, a graph for finance, a microchip for systems. Use a clean, professional, monochromatic color scheme. 12.3 Giving back to the profession, volunteering and board membership. We have spent 11 chapters talking about what you can get out of this profession: money, prestige, stability, and career advancement. Now, we must discuss what you put back in. There comes a point in your career, usually around the manager or senior manager level, where your network becomes your net worth. The best way to build that network, and to refine your leadership skills, is through service. The power of the nonprofit board. Serving on the board of directors for a nonprofit organization is one of the most effective ways to accelerate your executive maturity. When you join a board as a treasurer or finance committee member, you are no longer just the person preparing the spreadsheet. You are the voice of financial reason. You are advising the executive director on cash flow survival, grant compliance, and strategic expansion. I have seen senior accountants join a local board and suddenly find themselves presenting budgets to a room full of community leaders, CEOs, and philanthropists. That level of exposure is impossible to replicate inside your firm or company cubicle. How to start? 1. Identify passion. Do not just pick a charity to pad your resume. Pick one where you care about the mission. You will be spending late nights looking at their messy QuickBooks files. You need to care. 2. Start small. Local arts organizations, Animal shelters or youth sports leagues are always desperate for financial literacy. 3. The treasurer track, explicit ask to join the finance committee. This is where your CPA skill set offers immediate, tangible value. Mentoring the next generation. Remember the anxiety you felt in Chapter 3? Remember the confusion of your first busy season? You now possess the map to the minefield. Mentoring is not just altruistic, it keeps you sharp. When you have to explain a complex concept to a junior staff member or a student, it forces you to clarify your own understanding. Furthermore, the staff you mentor today are the controllers and CFOs of tomorrow. The loyalty you build now pays dividends for decades. 12. For final thoughts, the lifelong responsibility of the trusted advisor. As we close this chapter and look toward the end of our journey in this book, I want you to reflect on the title often bestowed upon us, the trusted advisor. It is a heavy title. It implies that when a client or employer is facing their darkest financial hour, or their biggest strategic opportunity, they turn to you. They do not turn to you just because you can balance a ledger. Computers can do that. They turn to you because you have proven that you possess the ethics to tell the truth when it hurts, the experience to remain calm when the numbers look bad, and the foresight to see the solution before the problem manifests. Future-proofing your legacy isn't about hoarding knowledge, it's about applying wisdom. It is about evolving from a technician who records history into a strategist who shapes the future. The CPA license was the barrier to entry. It proved you had the discipline. But the legacy? That is built in the quiet moments of continuous learning, in the specialized skills you hone when no one is watching, and in the helping hand you extend to the community around you. You are no longer just taking a test. You are carrying a torch. Keep it lit.